Theo. Usually when we have these updates, there's so much to talk about. There's so much happening in the news, businesses, the economies, different economies, every single market we can talk about for hours. And we always get sort of stuck into those details. But when you stand back a little bit and look at the broader picture, things look quite differently, doesn't it?
Yeah, I think it's actually part of behavioral finance is the mistake that we make of putting too much emphasis on the immediate news and the news that has just happened. It's a recency bias, and that's a mistake. But let's go back to 2010. 2010, we hosted the World Cup. In that year, we had almost no load shedding. There was a bit of load shedding before that, but in that year, almost no load shedding. South Africa was investment grade. So international money flowed into South Africa. Our economy was growing at 3%. Actually, in 2011, 3.3%. If you then look at the rand was 7 Rand 10 to the dollar, 13 Rand 50 to the pound. We hadn't heard of the Guptas. State capture was not even a word in what we talked about. So it was actually a period when things were looking good, stuff was in the right direction. We did not know what was going to happen. So now take 2010 and we go all the way to 2023. So where are we now? We're junk status. Our bonds does not qualify to be investment grade. That's changed. We're on the grey list. That's changed. We had our economy struggling to grow at something, anything. We're just not growing. We've, in the meantime, Judge Mogoeng had to explain to us what a constitutional democracy is. Remember one night when he talked about what Jacob Zuma did? We had state capture and the Zondo Commission. We had massive company failures. I mean, Steinhoff at some point was the 15th biggest company in South Africa. Steinhoff failed. We had the failure of African Bank. We had the failure of Tongaat. So if you look at these 2 years, 2010, brilliant, 2023, in that period, an incredible amount of things went wrong. So let's look at financial markets. If you look at the inflation over this period of time, what you could buy for $100 in 2010 would cost you 196 Rand. So almost double. So 100 Rand, you need $200 today to buy for the same value. That is inflation. That was 5.2% average on this period. If you had taken your money and you put your money in a money market, straightforward money market earning interest, the $100 would actually have grown to 227 Rand. So you actually just beat inflation. But remember, you pay tax on interest. So you would have just beaten inflation. Now, had you gone in 2010 and you decided, I'm going to put my money in a normal stock standard balanced fund, and I picked 2 balanced funds. I picked Alan Gray's balanced fund and the equivalent balanced fund from Coronation. Why? Alan Gray has a value biased, whereas Coronation has a growth biased. I just picked them because the stats are available, easy to get, both over the last 13 years. What would have happened? And remember, we had all this trouble in this period. What would have happened? Your $100 would have grown to 360 Rand in both of them. The difference is minutely small. So you would have not only outperformed inflation, outperformed money in the bank, you would have handsomely outperformed. You actually had a growth rate of 10.2%. That's exactly what they aim to do. They aim to beat inflation with between 4 and 5% a year. That's what they did. So the key here is, even with all these happening, 2010 being almost a Goldilocks environment, 2023 and all the way being actually a massive disappointment. What did these funds do? They did what was promised on the box.
So Theo, then, we actually need to just focus, take our focus a little bit back and zoom out.
Yeah.
And perhaps then control what we can control.
Yes. And don't get caught up in the daily news. Because if you had done that, with COVID, if you look at the movement, there was actually quite a drop. There was a 30-odd% drop in these funds. Had you reacted on that, you would not have come close to what we saw. So make sure these fund managers are given the space to achieve their mandate and then measure the mandate. Now, remember, historic performance is not a predictor of future performance. But if you look at where we are now, number one, that both these balance funds have a major portion in the money market and capital markets where they get incredibly good yields. If you look at the current capital market wholesale rate, 10%, we all know where interest rates are. That's positive. The JSE is at decades low from a valuation point of view. That's positive. And over this time, in the beginning, they could take a small portion offshore, around about 25%. Now they can take 45% offshore. So these funds are actually in a much better position given valuations, given their mandate than they were. So are they going to do what's said on the box? I don't know. There's a good chance.
So we should stop putting as much energy in the news of today, the load shedding, the politics, markets, and control what we can. So what can we control? Asset allocation. You can, whatever is right for your position, you need to make sure that that's correct. Diversification inside those assets. Make sure that you've got enough of that. Make sure you've got enough offshore versus local. And then, of course, costs. You can control spending, savings.
And your behavior. You need to control your own behavior.
Do not climb out of your fund when it's at that low point, like you say, 30% down. That would have been a permanent loss.
Yeah, and I think sometimes we get caught up in the day-to-day news, and we get caught up into the environment we're in now. Remember, investment is not a limited overs or one-day game. It's a long process with long-term objectives. And these funds and the normal fund managers are empowered to make sure they achieve the benchmark. We will only make a change if there's a big change in your own circumstances, or if there's a big change in terms of the fund and what the fund does. But as long as they stick to their mandate and we've got confidence in that, there's no reason to change.
Yeah. So focus on that you can control, and the long-term results will be there.
Thank you very much, Yolande.